our Leslie Picker reporting moments ago that Birkenstock plans to price its IPO around the middle of its expected range, $46 per share. Joining us now with his take is Storch Advisors CEO and former Target Vice Chairman Gerald Storch. Jerry, is this the time to buy $100 sandals and or the IPO of a company that makes them?
I wish you'd get them for $100. They're more like $150 to $200 now. Management's done a brilliant job, really. I mean, really amazing over the last decade. They have taken this brand, moved it upscale. You know, they thumbed their nose at Amazon. They cleaned up distribution. They said 5 years ago, we're not selling Amazon anymore. In fact, they dropped a lot of shoe stores that didn't display their product properly. They made it cool, something that no one thought could ever be cool. So great job. The real question is one of valuation here. I don't know. This price is about 6 times sales. Nike's like at 3 times sales. So is that a valuation that you can justify going forward, particularly as we enter a more troubling time for the consumer? And, you know, the question comes down to, is this a cheap luxury, sandals at $150, $200, or is it an overpriced indulgence to pay that much for sandals? Time will tell.
So along those lines, this has been an economy where the consumer has been spending more on experiences, on services versus product. How does that affect investors now? Should investors think about those product-type companies because maybe they've been underloved, or has the inventory situation, the demand situation shaped up to this point to where it's still worth worrying about product companies?
Look, generally speaking, in this time, you're correct. People are not buying discretionary products. So apparel and footwear have done fairly poorly. As you know, Nike shares have not done well. But this is a differentiated offering. This is something very, very unique. And a company like Lululemon continues to do well, even in this economy. So it's up against a lot of headwinds. You know, it's not a time, if you didn't know what company we're talking about or how they're done or how well managed they are, it's not a time you say, want to buy a shoe company, you know, for 6 times sales. I don't think most people would go for that, but they've done a great job. So, again, we'll have to wait and see. I don't think Bernard Arnault is a fool, you know, and he's backed this thing. And it's clear the objective is to keep expanding it, moving it a little more upscale, you know, into adjacent categories. They got a lot more growth ahead of them because they're smaller than a company like a Nike, so maybe it could justify it.
Yeah, Jerry, I am curious, though, if we expand this out, your take on consumers right now, at least here in the U.S., continued to be resilient this year, but now we've got student loan repayments, we got higher rates, we got dysfunction in D.C., we got geopolitical risk, energy prices are coming off a little bit, still elevated, inflation coming off a little bit, still elevated. Are you seeing signs that the consumer's cracking here or no?
Absolutely. Again, my outlook for the holidays is very sobering. I think this is going to be the toughest Christmas in a long time. I've been saying that for a long time. If you look at sales of things, you know, physical products, and adjust those sales for inflation, the number of units sold has been negative and declining for almost a year now. So one thing customers aren't buying is things, particularly discretionary products. They're buying necessities. Look, we heard from PepsiCo today. Even food, while their sales were up, it was more than 100% a pricing action on their part. So consumers are buying less things. What they are buying of things are necessities, you know, food, gasoline, whatever they have to buy. They are still spending more on airfare, on vacations, those kinds of services. But the rate of growth there is slowing down. And meanwhile, a lot of the so-called services growth that we hear about is higher rent prices and, you know, higher medical prices. So the consumer's stressed.
Okay. Jerry Storch, thanks for joining us.